Hello there. Welcome back to Grade 12 Accounting. In this video, I want to look at the preparation of income statement. And we've got a question that we have here on company financial statements. And it's question one on that question paper. The question reads, you are provided with information from the records of Fast Limited for the year ended 29 February 2024. And then on the third part, that is 1.1, reads, complete the statement of comprehensive income for the year ended 29 February 2024. Not some information is included in the answer book. So we are only going to look at part 1.1, and this question is got 32 marks. So we go down and see the information that we're given in the question. You'll see that we're given information why we're given an extract of relevant balances for totals from books on 29 February 2024. So this is a list of balances that we are given. Then we've got a continuation of information on information number B, going down to I would say that this is the next page that we have. So you are supposed to go through each and every information before you start answering the question so that you can know where exactly do you need to adjust. So we go down, we see that our information is up to additional information G. So this is what we have. So going now to our answer section, you would see that this is our answer section whereby we're given Fast Limited statement of comprehensive income for the year ended 29 February 2024. So we are given the sales role that we have there. So we need to start by trying to find out how can we find the figure for sales and cost of sales. But we are seeing that gross profit, we are given it as 8,480,000 as pre-tax. So we go back to try to see if we can get the figure for sales in the list of balances that we are given there. So going down, you'll see that we are not having anything to do with our sales. So it means we are not giving ourselves the list of balances. Then we go to additional information, try to find out if we have got any hint that we can be able to find our sales. So if you go to B, it is the gross profit for the year ended 29 February 2024 was calculated at 8,480,000 rands. A markup of 100% of cost was achieved. So from this statement, we can be able to find our sales. Remember, we are supposed to say cost price. We add our markup, you get your selling price. So you see that the markup is the one that you are given. So this markup is this one, which we say our markup is equal to 8,480,000. But you know that the representation in terms of proportional representation using percentages, you know that the cost price is always 100%. So we are going to say cost price is 100. And we're given the markup again is 100%. So if you say plus 100%, you're going to get your 100%. So you can use this proportionate representation to find the figure for our sales. So basically, we are saying our cost price, our markup is the one that we are given. So we are saying markup, which is 100% in this case, is equal to 8,480,000. And then we try to find out our selling price, which is 200% in this case, which is equal to the question that is the figure that we are looking for. So basically, we are saying we are going to use simple proportion there by saying what we don't have is 200. So we are going to say 200 over what we have, which is 100. Then we multiply by the given figure is 8,480,000 over 1. So this is how we can find our sales figure. So if you calculate very correctly there, you are supposed to get 16,960,000. So we can come and summarize it in the other section by saying our sales, we are saying 200 over 100. And then we multiply by the figure for gross profit that is given, which is 8,480,000. And the close bracket. So you see that if you calculate it in this way, you are going to get your 16,960,000. So having done that now, you can now be able to find your cost of sales. Remember, to get your gross profit, you say sales minus cost of sales to get your gross profit. So we can try to represent this in the formula by saying sales minus cost of sales, you get your gross profit. So in this case, we are saying our 16 million 960,000. We subtract the figure for cost of sales that we don't have. You can find the gross profit, which is given as 8,480,000. So to find the cost of sales, make it this type of formula, you see that it remains as cost of sales is equals to our 16,960,000. Subtract our 8,480,000. And we are going to find that we are going to find the same figure for gross profit, which is also 8,480,000. So this becomes your cost of sales. So we go there and put our cost of sales, which is 8,480,000. So we can now maybe try to put the working in brackets whereby you say 16,960,000 minus 8,480,000. So this is what we have in terms of sales, cost of sales, and gross profit. So we go to other income section whereby we are going to list other income in this box that we have, and then put the total here for other income. So we already have commission income is pre-entered, so we can try to find other figures that were given in the question in the list of the balances that we have there. So let's try to find out. We can try to find out other income that we have in the question, so we can start from the beginning of the list of balances, going down, checking for incomes that we have in the question. So you'd see that we've got rent income here, and it has an amount of 109,200 here. So we are going to try to find out if there's anything that is affecting our rent income in the additional information. If you don't have, we can take our figure 109,200 as it is. So let's just try to find out in the additional information if we have got anything that is affecting rent income. We go down looking for those adjustments. So we go to item 5 for information C, which reads office space was rented out from 1 May 2023. On 1 January 2024, the rent was increased by 1,200 per month. The rent of February 2024 is outstanding. So it means the rent that was received is for the months excluding for February 2024. So let's just count the number of months that are there before it was increased. Remember, it was said it was increased on 1 January 2024. So we are starting from 1 May. It was rented out from 1 May, which is the whole of May, June, July, August, September, October, November, December. So January, that's when it's increased. So we've got 1, 2, 3, 4, 5, 6, 7, 8. So we've got 8 months. Maybe you can count again 1, 2, 3, 4, 5, 6, 7, 8. So we've got 8 months before being increased. Then after it's increased, we have only January, because February, they're saying the end of February is outstanding, which is February 2024. So we've only January 2024 when it was received. So we've got only one. So we can now try to formulate an equation whereby we are saying for the 8 months it did not increase. So let's assume that the rent is R, and we say 8 times R becomes our 8R, and this was before it increased. Then after it increased, I will only have month. Then we are saying plus R plus it increased by 1,200. So the January it was R plus 1,200. And then we get the total rent that we are given in the list of balances, which is 109,200. Then we can try to formulate an equation there. So we just remove the brackets there. It becomes 8R plus R. It becomes 9R. 9R plus 1,200 equal to 109,200. So we can take R on the other side. It becomes 9R equal to 109,200. We can take 1,200 the other side. It becomes negative. So we say 1,000 minus 1,200. Then in that case, it becomes 9R equal to 108,000. Then we try to divide by 9 both sides. So we say 108,000, and then we divide by 9. We are going to get to 12,000. So it means our R is close to 12,000. So this is the rent before it increased. 12,000 rands was the rent before it increased. Then after it was increased for January, it was now our R plus 1,200. So it's now for January and February, it's now our 12,000 plus 1,200. And we are going to get your 13,200. So 13,200 applies for January and February. In February, that's where the year is ending. So we have got 13,200 rands for January and February. So the February we haven't received it, so it means we are going to add 13,200 representing our rent for February. So remember the question is saying the rent was increased by 1,200 per month. Then the rent for February 2024 is outstanding. So when it's outstanding, we are supposed to add it. So we go down there and add our 13,200 to the figure for rent that we are given in the list of balances, which is obviously 109,200. So go and adjust that. So here we are saying rent income. Obviously, we're going to show the working by saying 109,200. And then we are supposed to add 13,200. We do that, we are supposed to get to 122,000. 122,400. So we go back to the list of balances and try to find out about other income that we are given in the question. So we'll go up. So after rent income, we'll go down looking for other income that we have. We've got interest income, but we know that interest income, we adjust it. We adjust interest income after operating profit by entering into the operating profit. So we leave it, go some expenses, it's an expense. Then lastly, we put owner share dividends, which is not a part of our income. Then obviously go to extra information to try to find out anything that can lead us to an additional income. Go each and every extra information. But you'd see that on the issue of valuation of stock taking on February 2024, review the following trading stock will require 68,200. So you are supposed to calculate trading stock surplus. We might have trading stock surplus as part of income if our physical stock count figure or stock taking figure is above the book value figure, we are going to get as a surplus, and it is an income, and it can also be an expense if our book value is more than our stock taking value. So what we are saying is we can try to calculate it by saying book value minus the physical stock count figure. So the answer that we get, if it's a positive, it represents an expense, which is a deficit. And when it's a negative, it's a surplus. As simple as that. So when it's a surplus, it's an income. So we are just going to calculate it as such. We'll come here and check out the book value. Given the question is trading stock is 450,000, 450,300. So we are saying 450,300 representing your book value. Maybe we can try to. We are saying 450,300. We subtract the physical stock count figure which we are given here is 468,200, which is saying stock taking on 29 February 2024 is the following. So we subtract it 468,200. But then before you put them like this for book value, you need to also to check in the internal information if you have got anything that adjusts in the book value. If you have got any adjustments that can make the book value change, maybe there are some adjustments which are not taken into account during the financial period, we can then adjust them. The net figure is the one that we're going to compare with the fiscal stock count figure that we have. But in this case, in our question, we don't have anything that's going to make our stock taking figure, our book value figure more or less. So we can just take the figures as they are. So when we subtract there, we are going to get your figure as 17,900 as a negative 17,900, which is a surplus. So if it's a surplus, we are going to take it as 17,900 surplus. So we put it under other income. So we come in the other section, and we are saying trading stock, surplus. And then we just summarize the working, whereby we say 450,300. 450,300, then we subtract your 468,200. And then the answer that we're supposed to get is a surplus figure of 17,900. So we can try to say 17,900. So this is the figure that we have. Then we can now add our other income. We say 17,900 plus 122,400 plus 53,000. And then the total figure that we're supposed to get there is other income becomes 8,673,300. So this is what we are supposed to say gross profit plus other income, then you get your gross income. So if you add there, for gross income, you're going to get 80 million. Gross income becomes 8,600,000. Let's try to say. For other income, we can check the figure for the total figure that we are getting for other income. So the figure that we are getting for other income is a wrong figure there. We can just try to correct it. Remember, we are saying 122,400 plus 70,900 plus 53,000. So obviously the figure is going to be, we can try to edit. And we get 193. 193,300. So this is the figure that we get there as our total for other income. So for our gross income, we say gross profit plus other income, which is 8,480,000 plus 193,300. Then we get your total for other income, which is going to be 8,673,300. So this is what we have in terms of our other income. Then we go to our operating expenses. For operating expenses, obviously, we are going to put our total for operating expenses here. And then we list all the operating expenses beneath that. Remember, we've got also depreciation that is pre-entered there. So we can go to the information that you're given in the question item by item and try to see what other expenses are given in the question. We can start from the beginning, going down, checking expenses that we can have there. We can see that we have salaries and wages here, and it has a figure of 843,200. So we can check additional information if you've got anything that is affecting our salaries and wages in terms of prepayments, accruals. So we can go down checking if you have got anything affecting our salaries and wages. So go down. See that we have got nothing that we are seeing. So we can take the figure as it is, which is salaries and wages, 843,200. So we take the figure as it is and transfer it to the income statement. So here we are saying salaries salaries and wages, the figure that we have is 843. 843,200. And then we go back after salaries and wages, we've got directors' fees, which is our 2,300,000. We go to check additional information, anything that is affecting our directors' fees. We go down. Now we go to item 4 on information C. And try to see what we have in terms of that item. We see that information 4 is saying the company had 4 directors during the entire financial year, receiving the same monthly fee. 2 of the directors are still owed their fees for February 2024. So we have 2 directors still owed their fees for February only for 1 month. So it means 2 times 1 month, you get your 2. So we have got 2 months that are missing from the figure that we are given in the list of balances. But we have 4 directors. It means the number of months that are supposed to be there is, remember, we've got 12 months for each director. 12 months for each director, which is for the year, times the 4 directors. Then you get the total that was supposed to be received, which is, you get 36, sorry, we get 48. So the total that we get there is 48. So it means 48 months was supposed to be for the 4 directors for 12 months, but we have 2 months, 2 months that are not yet received for 2 directors. So we subtract 2, and we are going to get to 46. So it means the figure that we are given in the list of balance represents 46 months. But we want to provide for the 2 months that are not there. So it means this is an accrual that we need to add to the figure that we are given in this balance. But for us to add them, we have to find the monthly fee that is supposed to be paid, and then we can multiply by 2 to get the total for 2 months that are still owing. So we go to our additional information and try to see what we have. So we come here, you see that the figure for directors that we have is directors' fees is 2,300,000 here. Directors' fees, 2,300,000. So we are saying 2,300,000. We divide by the 46, that is representing 2,300,000. And we see what we get there. Let's try to calculate it as such. You're saying 2,300,000 divided by 46. You're going to get your 50,000. So it means each month you're supposed to receive 50,000. But we have 2 months being owed, so we multiply by 2, and we are going to get 100,000. So you need to add 100,000 to 2,300,000 so that we can get the what was supposed to be the director fees for the entire year for the 4 directors. So go to the other section. We'll go to the other section on directors fees. We are seeing on directors fees, now we are saying on directors fees we are saying we have got 2,300,000. 2,300,000 plus 100,000. The 100,000 is the one that we calculated there for the 2 directors that is still owing. And then if you add, you are supposed to get 2,400,000. 2,400,000. thousand. So this is the figure that we are getting. So we can just put it as it is. We are saying 2,400,000. Right. So this is the figure that we have for director's fees. So we can try to go to the next expense that we are given in the question. Right. What we are going to do next is to try to find out another expense that we have after director's fees. So we can go to our list of balances and try to find out what we have. So we are here after director's fees. We've got audit fees. Audit fees, we've got an amount of 102,000 here. So we can go and check information again to find out what we have about audit fees. So if you come here, you would see that we are given here that 75% of the audit fees was paid. So it means 25% obviously was not paid. So what we are saying is if 75% of the audit fees was paid, it means 100 minus 75, so 75 is equals to 25%. So 25% was not paid. So basically, the figure that we are given, it means it represents 75%. Then the figure that we are looking for is 25% that we can add to the 75% to get to 100%. So basically, we come here. We are saying our 102,000 is the one that is representing 75%. So we can just make a proportion by saying 75 is equal to 102,000 for audit fees. And then the figure that we are looking for is 25, which is still not yet paid. So we can just say what we don't have is 25 over what we have 75, multiplied by the given figure 102,000. And then we do that, we are going to see that the answer that we are supposed to get there, you are going to say 25 times 102,000. And then the answer that we get, you divide by 75. And obviously, the answer that we are supposed to get is 34,000. So this is what we have in terms of the audit fees that are still outstanding. So we add them to the 75,000. We add them to the 102,000 here. So that we get the total that we are supposed to be paid for the period. So we come to the other section. So we are saying audit fees. The same 102,000. And then we add the 34,000. And then the final answer that we are supposed to get is 136,000. Then having that now, we can now be able to try to see other expenses that we are given in the question. We can go there to see if we have other expenses that we have in the question. So after audit fees, we've got sundry expenses, which we are given as a question mark here. So obviously, when given it as a question mark, obviously it's going to be a balancing figure. So we can just go and write sundry expenses, and we can just come back to find it as a balancing figure. So we are saying sundry expenses. And the figure for sundry expenses that we are going to find here, get it as a balancing figure. So we can just leave it blank there, and we'll come back to it. So I will go again to see if we still have another expense that is still remaining. I will go to additional information. to check other expenses that we have there. But we know that we are given information about provision for bad debts on item 2C2, and that's provision for bad debts to 5%. Remember, we are supposed to say 5% of the level of traders control. And if you come here on the list of balances, you see that the debtors control is 520,200. So we check if you've got anything that is going to affect our debtors control figure. Maybe there are further bad debts that are there that needs to be written off, but we see that we have got nothing to do with that. So just going to say 5% of the figure that we are given in the list of balances, which is our 520,200. So we are going to say 5%, which is 5 over 100 times 502,200. We calculate it as such, we see that the figure that we are going to get is going to be 26,010. So this is the level of provision for doubtful debts for the current year. We compare it with the previous year that is given in the list of balances, which is the provision for bad debts, which is 19,500. So we've got 19,500, which indicates a movement from 19,500 to 26,010, which is obviously an increase. So when it's an increase, we know that it's an expense. We need to put it under operating expense. But if it's a decrease, we know that is income, and we have to put it under other income. So we can just go there and try to calculate the difference that is there that is going to represent the increase by saying 26,010, and then we subtract your 19,500. And then the difference that you get becomes an expense. So if you come here, so we are saying the figures that we are having for provision for bad debt adjustment. For bad debts adjustments, we can just try to summarize it by 26,010, and we subtract 90,500. And we're going to see an increase of 6,510. So the standard expenses, we can just remove it because we have it there, it's pre-entered there. So we can just leave it, remove this one, and leave it like this. So this is what we have, and then we can now try to again check if you've got any other expense that we can include there. So you'll see that we have no other expense that we still have remaining, but the figure that we want to find, remember, we cannot find the figure for our operating expenses because we don't have the figure for standard expenses. So we need to get our standard expenses as a balanced figure. So it means we have to first find the figure for total for operating expenses, then we can find the standard expenses as a balanced figure. So, but if you come to information E, it reads operating profit on sales was 25%. So we can be able to find our operating profits, and when we find our operating profits, we can be able to find our total for operating expenses. So basically, we are saying 25% is operating on operating profit on sales. So if you come here, you see that our sales figure, we have it as 16,960,000. So 25% as a decimal is 0.25. Is equals to operating profit over sales, which is our sales 16,960,000. Right. Right about now finding our operating profit, we can just make it the simple formula whereby it is it remains as operating profit is equals to 0.25 times 16,960,000 there. And we calculated as such to see that the figure for operating profit that you are supposed to get there is going to be 4,240,000. So this is the operating profit. So we can just summarize the working brackets for our operating profit. It's going to be sales. Remember we said 16,960,000. then we multiply by 0.25. And then the figure that we got there was 4,240,000. So we now have the figure for operating profit. So we can be able to find the figure for operating expenses by saying our gross income minus operating expenses will give you the operating profit, of which our gross income is 8,673,300. My operating expenses, which we don't have, is equal to operating profit, which is 4,240,000. Which is 4,240,000. So we can make operating profit, operating expenses is the formula, and it becomes operating expenses is equal to 4,240,000. Let's just try to see. It's equal to 8,673,300. 300 there. Then we subtract your 4,240,000. So you see that when you calculate it as such, you get a figure for operating expenses of 4,433,300. So this is the figure that is going to come here is our operating expenses, 4,433,300. So having done that now, we can now be able to figure for standard expenses here as a balancing figure by saying 4,433,300 minus all what we have inside our box. And then for figure for standard expenses that we are supposed to get there would be 540,790. So this is what we then having done that now, we can now try to find out about interest income. We go to the question. And you are seeing that our interest income is a question mark, so we are going to find it as a balancing figure. Obviously, we are going to leave it. So we leave our interest income. So our interest income, we are saying we are leaving it blank. Then net profit before interest, we cannot find it because we don't have interest income. We leave it again. Then interest expense, we can try to find out there. How can we find interest expense? We've got information that are given in the additional information that we can use to find our interest expense. So we are here. Provide for interest on loan capitalized. And then a fixed monthly repayment of 8,300 has been made and recorded for the financial year ended 29 February 2017, 29 February 2024. And then we go to next point, the loan statement received reflected a closing balance of 427,000. And then last point, loan repayments in the next financial year will include a capital portion equal to 1/8, which is 150 of the outstanding loan amount. So we want to find the figure for interest given the figures that were given there under mortgage loan. So what we are supposed to do is let's try to find out